Hey there traders, today is May 7th and you're looking at a 5-minute chart of the S&P 500, and as you can see, the MACD broke out above the signal line at the open and never looked back and held above the red 50-day moving average on this 5-minute chart all day and never even touched it throughout the entire session, showing how much buying pressure there was all day after opening above the 50-day moving average on the daily. As I've shared with you guys in the video over the weekend, I always put the options chart and the underlying stocks chart side by side before entering a long or short position. On the daily chart, it was clear the SPY ETF had broken out and above the 50-day moving average after its test on Friday, and on Monday, it just gapped right over it and never even thought about filling the gap. Once the MACD crossed over the digital line on the options chart, that was our buy signal, and that is where I personally bought the 514 calls. Here's a screenshot of my buy order. On Monday, the S&P 500 high of day was 516.63. What's so special about that exact number? That's the April second low of day test of the 20-period moving average, and it's also the bear trap that took out so many bears as price formed a break of support low just to take the late to the party bears out for a long ride uphill. What does this price action tell us? When a bear flag forms in an ascending channel and gaps over the upward trend line of that channel, the bear flag is invalidated. If price never gets back inside that ascending channel, and as of now, the price action has cleared the ascending channel, so we have to give the market room to move up until price moves back down inside that ascending channel. The Fibonacci levels have all been cleared, with the next one to clear being the 0.236 level at 517.50, with a confluence of support at the 0.382% Fibonacci level and the ascending channel top at 513.02, which would be a retest of the breakout if that happens in the coming days. Should price fail to hold 513 on a closing basis, that would increase the odds of a 50% Fibonacci retest of at least the 509.41 level of thereabouts, with the gap support level coming in next at the 508.74 level, and below that would increase the odds of another gap fill at 505.81. The next hurdle to the upside is a close above the 517.50 level, which is the 0.236 Fibonacci level, which opens the door to a test of 520 should the 517.50 level continue to hold. On the downside, a retest of the ascending channel bottom would come in near the 503.74 level, and a breakdown of that level increases the likelihood of, you guessed it, a bear flag measured move down to 485 to 490-ish level. Regarding Tesla stock, the price remains in a descending channel and found resistance at the declining 50-period moving average on the daily timeframe, but managed to close above the key support level of 184.50, and as long as that level holds up, that increases the odds of a test of upper channel support near 194.76. A close above that level opens the door to a retest of the declining 200-period moving average near the 219.13 level, and found support at the declining weekly 20-period moving average. A close below the 20-period moving average near 174 on the daily time frame would increase the odds of a retest near the 168 level gap close. A close below that level would also increase the likelihood of a 160 retest where there is an unfilled gap that goes from 160 all the way down to 141. On the upside for Tesla stock, a close above 185.90 increases the odds of a 195 test. A close above 195 and that puts 198.70 back on the table, with the next resistance level at 208 and a gap close near 212. On the downside, if Tesla stock can hold above the 50-period moving average, the next key level of support is near the now rising 20-period moving average, near 167.80. So remember guys, always combine a chart of the underlying security with a chart of the actual option that you are about to trade. If you're not utilizing the information that both of these charts give you, then you're at a huge disadvantage because you're not seeing the full picture and not able to get all of the information you need to quantify the risk. As usual, we traded the S&P 500 again with 0 days to expiration stock options again today. Not all of my trades are 0 days to expiration, many are swing trades and day trades that last on average 1 to 3 hours, so you won't get a trade from me that lasts 3 to 5 minutes like some of these trading services are offering. If you haven't signed up to get my own trades as I place them with the strike, target, and stops, then what are you waiting for? If you learned anything from this video and if you think we've earned it, please leave a thumbs up and subscribe and share this video with a friend. I hope you all have an amazing evening and we'll see you on the other side.